welcome to Equity Mates. My name is Bryce. Thank you for joining us this afternoon. As always, I am joined by my equity mate, Alec. How's it going?
I'm very good, Bryce.
That's good.
Looking forward to this episode.
Yes.
We're introducing a new segment that we hope will become a permanent segment, depending on feedback from everyone watching, of course. But it's the very first Watchlist Wednesday.
Watchlist Wednesday. We are pumped. The aim for this segment is really to bring in an expert from the investing community and pick their brains about a number of stocks that are on their watch list to help us with our investing journey. And it is our absolute pleasure to welcome to the show one of our sort of favourite guests and longtime friend of Equity Mates, Julia Lee. It is so good to have you with us. Julia is Chief Investment Officer of Burman Invest, and as I said, longtime friend of the show. So Julia, to kick it off, we want to sort of pick your brains around how the start to 2021 has been. It's been a pretty crazy last week with GameStop and a number of other things going on with the election. How's it all been for you?
Sure. I guess we've started 2021. Firstly, the first couple of weeks were great, and then we ran into Reddit and GameStop, AMC, and that sort of threw a bit of a spanner in the works. Having said that, I think the market had been overbought, so these pullbacks are quite normal and healthy for the market. And I think, look, we're still in an upswing. We're still in that upswing stage of the business cycle, which is great news for equity markets. And any pullback is an opportunity to buy stocks at a cheaper price. There's lots of concern about GameStop and I guess what that means for the market. I mean, it's been absolutely incredible. And I think it's a timely reminder that investing is more than just the study of finance. It's a study of what people do with their money, and the behavior of investors, speculators at times can be absolutely mind-boggling. I mean, one of the biggest behavioral finance concepts which impact on the market is this concept of herding, where you see everyone piling into a stock and driving it up or down depending on if they're buying or selling. And we know that buyers usually drive up prices and sellers usually drive down prices. So the fact that we've seen sort of these Reddit forums all banding together and investors banding together to buy certain stocks, and that massive herding effect coming through has been incredible to watch. I mean, bubbles are as old as the market itself. And I guess the thing with bubbles is that you do see this disconnect between fundamentals and what's actually happening. So it's more driven by emotion rather than logic. And we know that bubbles at some stage have to burst because people are usually driven with the hope of passing on the stock to someone else at a higher price. But in this case, some of those speculators really driven by, I guess, a protest, a social media type of protest against hedge funds and the top 1%.
Yeah, it is fascinating times in markets. And we could talk about GameStop all day, Julia, but I'm going to pull us out of that. We're approaching reporting season in Australia. Are there any particular companies that you've got your eye on for this coming reporting season?
Sure. I mean, Ren, I think this reporting season is going to be a bit of a strange one because we know what companies have done well because they're the companies that have benefited from the COVID-19 situation and the lockdown. And we know which companies are struggling because they're the ones that haven't benefited from the COVID-19 lockdown. So obviously travel companies, hospitality companies, all these companies under pressure. But then on the flip side, because we can't travel, we're spending a lot more money on our cars and on consumer services as well as consumer products. So some of those retailers are expected to do very well. So expecting to see JB Hi-Fi as well as Harvey Norman doing well out of this reporting season. We also know that commodities have been rallying quite hard. So BHP, Rio Tinto, Fortescue should all report well with some hefty dividends as well. And also the housing market, we didn't see that crash come through. And instead, the housing market has been pretty strong. So those home builders and those building material companies like James Hardie and Boral, I think will have a knockout reporting season as well. On the flip side, though, we know the travel companies have been under pressure, and in particular, just watching those travel companies because we did see that New South Wales lockdown coming into force in December, which is peak travel period and school holidays. So I think, Qantas is at risk of a short-term downgrade. I think the biggest question for investors is what do they do if you do see downgrades coming through from some of these COVID-related companies? Is it time to actually start buying into these stocks and rotate into some of these beaten down COVID-19 plays? And I think it is time to start a bit of rotation away from some of those stocks, I guess, that have been benefiting from the COVID-19 situation and put some money into some of those travel and struggling stocks.
So, Julia, just before we move on, we do have on the screen two of the stocks that we'll be diving into a little bit later, which is Incitec Pivot and Lynas Rare Earths. But before we do, one last question just to close out that. You mentioned they're expecting retail to perform strongly, but that would be off, you would assume, a relatively low base, last quarter or the last half, given how smashed it was because of COVID. How do you look at that in comparison to, I guess, the last sort of 2 years, or is it we're starting again and let's go for it?
I mean, a lot of retailers have been reporting record sales. So even in comparison to the last 2 years, things have been good, especially if you've got that internet travel, that internet channel, and you weren't forced to close down. In many cases, retailers, were seeing subsidized wages through government subsidies, as well as paying little or no rent during some of the period. And that's all helped as well. I mean, this week is going to be massive for retailers because we, of course, hear from Amazon. And Amazon's expected to see the strongest sales growth that we've seen since 2011 when it grew 40%.
Wow.
So sales growth expected to come in quite strong at Amazon, and I suspect that's the case with the rest of the globe as well. We were stuck at home in lockdown and probably internet shopping and unable to spend on things like travel. And if you have a job, I think things like car sales as well will be quite good, as well as, of course, spending on your house, whether it's a new fridge or a new appliance or a new coffee machine. All these things will continue to do well. The biggest question for investors is, has sales peaked there, or is it close to a peak, given that, of course, 2021 is hopefully the year of recovery where we start to come out of that lockdown condition.
Now, Julia, I think we've kept our audience in suspense long enough. We've had the two stocks up on the bottom of the screen, and I think it's now time we talk about the two stocks on your watch list. The first one is Incitec Pivot, ASX ticker IPL. Can you tell us a little bit about the company for people that may be unfamiliar with it, and then tell us why it's on your watch list?
Sure, I'm pretty excited about Incitec Pivot. I mean, this is a fertilizer and explosives company, and I think that this year it's going to be quite good, both those divisions. And look, when you look at agriculture here in Australia, things have been pretty tough, whether it's the drought or the bushfires, but things are looking up over here, and I think that bodes well for Incitec Pivot. Not only that, if we have a look at grain prices around the globe, the corn price is already up 15% just in January alone. And this usually is a leading indicator for fertilizer prices, which of course have also been rising. So look, I think the fertilizer division is looking pretty exciting at the moment. And the explosives division, which in the last results was quite disappointing, I think they're going to have a blockbuster year given the mining activity, the mining prices that we're seeing, and likely extra activity happening in that space. So Incitec Pivot, I think, will do really well in 2021. It's in my portfolio.
Nice, full disclosure.
It's in the Burman Invest.
So I'm interested to dig a little deeper here, Julia. I'm sure there are many other fertilizer and explosive manufacturers and producers, both here in Australia and around the world. And why is it you've chosen Incitec as the one to have in your portfolio over some of its competitors?
Yeah, look, I also like Orica as well as Nufarm, which are listed on our market as well. But look, with Nufarm, just the overhang of some of the court cases globally and the use of glyphosate, so just a little bit more cautious around Nufarm. And Orica mainly specialising in terms of the explosives division, but still liking Orica as well. But look, Incitec Pivot, I think in terms of the pricing, the outlook, the two divisions, the ability for Dyno Nobel, which is the explosives division, to bounce back, and having those two levers, I think, is hugely positive. On the risk side, I guess the things that I'm watching as possible risks is, of course, that climbing Aussie dollar. So that rising Aussie dollar would be a negative in terms of the earnings outlook. So watching the rise of that Aussie dollar very carefully. And the other thing is gas prices, which is an input into manufacturing of these products. So just watching the oil price. And look, both of the Aussie dollar and the oil price, I think, will climb in 2021, but that will be more than offset by the positive conditions that we're going to see in fertilizers and explosives.
Now, Julia, it seems like there's, when you're thinking about valuation for a company like this, there's a number of different aspects that you've got to think about. You know, the cyclical nature of the business. You mentioned the Aussie dollar and the oil price. Can you just tell us how you're thinking about valuation for this company?
Sure. I mean, I guess I think of valuation a little bit differently than most investors. When you're looking at fundamental analysis, basically you come up with an intrinsic value, and then, you know, if the share price is above that, it might be a sell, and if it's under that, it might be a buy. Look, I believe that things move in cycles, so that includes the price of businesses and the intrinsic value of a business as well, moving in cycles. So an upgrade cycle and a downgrade cycle. And as we get further into the cycle, I like companies that are improving in terms of outlook and in terms of business value. So I really do look for those companies with an improving outlook. And that's really the core of our strategy at Burman Invest, that we look for those companies with improving outlooks, because these are the ones that are likely to be in an upgrade cycle. And these cycles usually last for many years.
So Julia, let's move to your second stock pick that is, well, on your watch list, potentially in the portfolio as well, but that is Lynas. Rare earths, absolutely flying. What is it about Lynas that is appealing, and perhaps what do they do for those that are unaware?
Look, I think we've seen a number of interesting things coming out of the electric vehicle space over the last few months. One was that Tesla's result was quite disappointing, and that's impacted on lithium producers, lithium type of companies, together with even Lynas' shares, which have seen a major pullback. But then on the flip side, you've heard from General Motors that they'll be looking at an electric vehicle as well. So I think that's a huge positive. But altogether, if you sort of look at all the announcements around the electric vehicle space over the last couple of years, I think what's apparent is that we're moving away from petrol cars towards electric vehicle cars. So look, that's a huge positive for, I guess, those battery manufacturers and for rare earths as well. So I really like Lynas because of that reason. I think the main drivers of demand for Lynas comes from electric vehicles, wind turbines, things like military equipment, our rising use of technology, but also because it's becoming more and more important for technology companies to secure supply. And China still dominates the rare earth space. So it has become a strategic mineral, which means that Lynas is able to attract government funding as well. And we've recently seen that, where it was awarded a Department of Defense, a US Department of Defense contract, where the Department of Defense would contribute up to $30 million for a light processing unit over in Texas in the US. I think this is a good foot in the door for Lynas in terms of US sales, because it's much easier to have sales when you have a processing unit, and also opens the way for potentially a heavy rare earths processing unit, which is a higher margin product for Lynas. So look, I think there's lots of interesting levers happening here. Of course, just recently what we've seen from the share price of Tesla and the disappointing result that came out has been weighing on the stock, but I think that affords investors a good opportunity to get into this longer term structural trend that's happening.
Yeah, I agree, Julia. There's so many reasons to like Lynas, and it's probably one of the most popular stocks in the Equity Mates community at the moment. A lot of conversations around Lynas. You know, it's the largest rare earth miner outside of China, strategically important. Got a lot of good tailwinds in terms of the electric vehicle industry. I want to hear you take the other side of the debate, though. What are some of the risks that come with Lynas? What are some of the things you're watching out for, or might make you a little bit worried?
Sure. Well, with Lynas, there's always the Malaysian processing plant, which has been a problem and beset by problems, because the thing with rare earths is that they're not really rare, but processing it comes out with a lot of it's a pretty toxic process. You wouldn't want a rare earth separating facility right next door to your house. And certainly in Malaysia, some of the residents around that processing plant have, of course, there's been major protests and there's even been shutdowns, and it's become a political football at times. But I like this diversification now, where you'll have a plant not only in Malaysia, but it's looking at something in Kalgoorlie as well as over in Texas in the US. So I think that those type of risks have started to balance out. I think with Lynas, because it's already producing and it's the largest producer outside of China, there's the risk that you do see increased competition coming through. Whenever you see an increase in supply, usually that means that the price of rare earths sort of come down. But this, I think, is going to take a bit of time, and I like Lynas's expertise, but it, of course, is a risk. So just watching some of the rare earth miners and what they're doing in terms of this space, because of course the US is looking to accelerate some of that investment into strategic minerals. So the competitive landscape, I think, is very important to watch, as well as the take up of electric vehicles. A lot of it is going to be driven by government targets. So if those targets get pushed back because of COVID-19, then the rare earths, the lithium, the electric vehicle story also gets pushed back as well. And a lot of that electric vehicle story has been driven by China at the moment because of the subsidies. So the rare earth price is also being driven a lot by China's regulatory moves. But I think that the rest of the world is starting to play catch up there. In terms of Lynas's last results, we saw record revenue, but production was actually stable. And the reason behind that was that COVID-19 did shut down its Malaysian processing plant for a little while, and there was an impact there. But because prices had basically moved 50%, that's why you saw the record revenue coming through. So I like the pricing, and I like that this quarter that you see probably going to see less COVID-19 disruptions, and as the vaccines roll out, hopefully those disruptions become a thing of the past.
Well, Julia, I'm sure we definitely could continue talking stocks all day with you, but we are going to have to leave it there. And thank you so much for joining us on Equity Mates this afternoon. I'm sure it will not
Always
be
a pleasure. Thanks, Bryce.
time.
Thanks, Ran.
No worries.
Thanks,
Julia. That brings us to the end of Equity Mates for today. Hopefully you were able to get something out of that will help you on your investing journey. If you do want more information on Equity Mates, head to equitymates.com and you'll find all the necessary information. You can also join us on all of our social channels as well.
And make sure you tune in tomorrow to see another episode of Equity Mates, where we're going big, and we're talking all things macro with Thomas, the economist. So stay tuned, and tune in tomorrow, and I can't wait to see you then.